Okay, I keep saying trading from extremes, and you're sitting there going, well, okay, but you're not really helping me much. What's an extreme, right? If I weren't sending this to you, this is where you would need to start taking notes. But since you're going to get the slides and you can review this as many times as you like, you don't have to take notes. It's one of the, as Troy has mentioned before, before we recorded these things, I used to do them live. Then you were sort of stuck trying to remember what I said. Of course, it was a huge advantage for me in that because I could say anything and say, I don't remember saying that. This is recorded for posterity. Okay, extremes. And this gets into the nature of, this is something I've observed. This isn't rigorously derived, all right? Some of it is, but the thing about the previous day or two back, the extreme of the previous day or two, the low in an uptrend, the highs in a downtrend, are real good qualitative levels to keep an eye on. Your high volume nodes is an extreme. And then obviously it's the immediate session high or low, but that's only relevant after, an hour or so at a minimum of trading. And then you want to always be aware of any obvious migration of value, because the obvious migration of value is what we use to determine a bias. There are two things that we use to determine bias: conviction and migration of value. But this, you'll hear me talk about this over and over, these things. And it's uncanny if you were to do nothing but look at a chart and mark on the chart, like if you're in an uptrend, the previous day's low and the second day back's low, you would find it would be uncanny how often that proves to be an important level from where the market will hold. Okay, this is the ES, and of course this is recent trading. But if you look at this uptrend, previous day's low, this held in here until this day. So there are 2 days following this one where this held, right? All right, you spiked through it and then you traded back above it. Then you started the same process again. Now this is, at this point, this is the second day back. It's a wide range bar, so that's not particularly helpful. Then you had this low, and then you had this lower low. So one of these 1, 2, 3, 4, 5 days in here, the lows, one exceeded the lows by more than a little bit of the entire group. I could go through years of charts in different contracts and show you this. You can do this yourself. There's no point in me wasting our time doing this. But this is the type of thing, I will challenge you to prove me wrong and go back and look. I don't care what it is. It can be lean hogs. It can be the Canadian dollar. Now, the other thing, and this is from Don Jones's work, is that markets are not serially correlated. And what that means is that even in a strong uptrend, there's only about a 50-50 chance that the next day is going to make a higher high. Now, you can extrapolate from that, and you can glean usable information, because if you are in an uptrend and tomorrow doesn't take out today's high, the next day doesn't take out today's high, the clock is ticking on the probability of that high being taken out or a change in trend. And that sort of dovetails in with our concept of a balance area. See, all of these things, it's really incredibly elegant how these different concepts fit together. We have you could make a case that some of this stuff is qualitative. The ideas about how a market develops. But then you run across these statistical studies that actually validate the concepts. And as Raj points out, because he's a student of Don Jones's, Don's proven this. Michael, you say, can you apply this to today's ES? No, you can't, except to say that yesterday's low held. Not everything is tradable. It just isn't. It's never going to be. Today was a wide range day. Now, this is a 30-minute chart. Now, we knew coming in, and I talked about it in the DBSA. You can go back and look at the pre-market in the DBSA. We knew the levels that were important. As a matter of fact, if I'm not mistaken, I could be mistaken, I think I mentioned in the DBSA last night that the high from Monday was going to be important. But, when you have these levels taken out, and this was a little bit of a balance area. Now I realize this is hindsight, but I also can tell you for a fact that I know that there are people in the room that were long this because of the breakout here. But Michael, everything that I say, all of the information that I give you like that is not going to apply every day all the time. It's information that gives you something to keep an eye on that over time has value. And you don't use one thing exclusively. All of this, everything has to be put into a context. Okay, the most important areas in an auction are going to be the upper and lower boundaries, and especially when you get into what seems to have the characteristics of a mature auction. And some of the characteristics of a mature auction are, generally speaking, in almost any contract, if there are 4 or 5 days with the same general range, I'll start looking at that for opportunity, for initiative opportunity. For one thing, in a 4 or 5 day range, you have decent range from top to bottom. So you have range to work with. And then as each rotation, each day completes, you're increasingly likely to have the payoff of an initiative trade. So, that's why we start with looking at balance areas, and we covered that in an earlier session. So we're always looking at auctions, and then when you have a mature situation, you see me do this in the DBSA over and over and over again. Instead of globbing everything together just because it makes a neater looking or more symmetrical Gaussian shape, I will tend to break out the most recent auctions from the larger degree auction to see if there's a tell there, to see if I can find extremes or leans for a bias or for a specific trade. And that's how you use, that's the best use of the profile graph. And you see me, I think I'm pretty consistent about how I show these profiles in the DBSA. So the most important extremes, this is, by the way, this is the 2.5 through 2.8 auction. And here is the profile view of that auction. And if you look at this, it's not as defining in many ways as looking at the bar chart. So when I have information like this, I'm coming into the next day, you've heard me say, even if I'm a day trader, I'm trading tomorrow. If I enter a trade, I'm not necessarily trading that price. What I'm trading is I'm trading this. I'm trading against this. And if I can't trade against this, I have no business taking a trade, frankly. This is giving me the information I need to trade. And if I can't use this, then I'm trading randomly over here, regardless of the time frame I'm trading, whether I'm an intraday trader, a swing trader, or whatever. So this is this is sort of an ideal situation, but it happens all the time, guys. In all contracts, this is the S&P. I was looking at an example I was going to put in here, and we'll look at the charts in a minute of the Australian dollar. But when you have this pattern of roughly similar highs and roughly similar lows, it's an alert. This is an auction. This is a balance area. If I go to my profile chart, it's a mature profile. And it helps me to identify trade location, and it helps me to identify reasonable expectation for a target. Now, it's not just about identifying trade location. You want to identify trade location, but you also, trade location doesn't do you any good unless it's, you have the target once you're in the trade. Now this isn't perfect, obviously, and we're going to talk more about some of the things that you see in here. But you're looking to identify potential extremes, and if this market's in an uptrend, I have no business selling a spike. There's no reason to do that. I'm making it hard on myself to sell spikes. I want to wait till I get some two-sided activity before I begin fading an uptrend or fading a downtrend. Now, this isn't as nicely symmetrical as you can get, but this was an area. This was sort of a stopping price, and then you had this. We talked about two-sidedness and a nice symmetrical shape. Well, this was one of these two-sided trades with an upside bias. Now let me find a more symmetrical situation. Okay, here it is. This is one I'd seen. And understand, this is one contract. If I scroll through 2 weeks to find something in the Australian dollar, and then I take the Canadian dollar, and I take gold, and I take corn or wheat, I can find, if I do my homework at night, I can find a contract every night that could be setting up to give me one of these nice identifiable situations where I have previous highs in an area. So if I'm coming in and I don't know what's happened over here, the market closes and I'm coming in the next day, market closes here, then I have a defined area of trade location that I want to be paying attention to. And then if this market trades up in here, this is a 30-minute chart, which is not, that's a realistic thing. You can trade easily from a 30-minute chart. But I can go down the time frame and I can trade on then I can fine tune it and enter on a 5-minute chart. But this is part of the process of filtering your trades, knowing what you're looking for. And as you begin to trade this, look for the obvious, look for the balance areas, look for very close series of very close highs and very close lows over a period of several sessions, 2 or 3 days or 2 or 3 sessions. And that's how you begin to filter your trades. Now, and this is also how you use DBSA. If I go through a bunch of contracts at night, I don't spend much time on them. But if I say, okay, we're favoring short trades in the Canadian dollar, then, and I'm showing a daily chart, and you're going, well, why, that doesn't help me. Well, actually it does. It does some of the work for you, because then you can go to your 120-minute chart, look at a 120-minute chart, and see if something is setting up there that's more granular than on the daily chart. And then go to your 30-minute chart. And then go through the contracts like that. And I promise you, if you do that every night, you'll find 2 or 3 contracts that give you almost the ideal setup.